Good evening, ladies and gentlemen. We are going to start the session shortly. Thank you for your patience. So good evening, ladies and gentlemen. Today we have with us Mr. Siddarth Bhamre, Head Religare Research. He is going to take us through about the market positioning, trend, and sectorial view in today's session. Siddarth, an experienced research professional with 17 years of experience, he has worked with on market data analysis and advising on the market directions, investment calls, and strategies. With MBA in finance background, Siddarth has a knack to structure points that make sense and logic in the industry. His forward-looking approach across different organizations articulates overall accomplishment. With this note, I would like to welcome Mr. Siddarth Bhamre to take on from here on. Siddarth, over to you.
Thank you, Suraj. I hope I'm audible.
Yes, you are audible.
Thank you. Firstly, thank you participants for taking out time and giving your attention to what we want to talk today. And it's more to do with how markets are shaping up. And in times like these, when it's difficult to assess that what exactly should be done, and not just from investment perspective, but also from trading perspective, it's of paramount importance that one has to assess data, charts in detail from short-term perspective, and also understand the flow of liquidity from medium-term perspective. So we are making a small effort to add some value to your decision making through this small webinar, and hope you would like what we want to talk to you about it. Firstly, we all know that we are in a market scenario which is more on the negative side. I'll share my presentation screen over here, just one second. Is my screen visible?
Yes, Siddarth, very much visible.
Yeah. So though the screen is saying rollover analysis, it's not just rollover, but also how market is heading, whether we are in a downward trend which would continue for long, or is it like end of downtrend, or is it just a pause? So we'll make an honest attempt to explain what we are observing in market and try to make some sense out of data. You saw that these days expiry days are not as volatile as before, because we don't have dual type of position. There are more of short positions in market, and that's the reason expiry days are not as volatile as they used to be before. The other reason being that people square off their position much before expiry because of fear of delivery based settlement. So let's straight away get to data and what we want to convey out of it. Now on your screen, you're seeing Nifty and Bank Nifty price change and open interest change, or the open interest for last 3 series, that is from April to May, then subsequently June series, and how the July series is starting. So you'll see that Nifty has corrected mostly. April to May month was very interesting. We did see a substantial rise in the early part of April series. There were 2 very big days, big positive days, and everybody thought that the new bull run has started in our markets. And just when everybody became bullish, market corrected substantially. So don't go on this small figure of minus 1.28% for Nifty, or a flat figure for Bank Nifty. In fact, the correction from top during this expiry was huge, and the position built up was also very high. So the base building exercise of open interest started in April series, where most of the positions were short positions. Then if you come to see what happened in May and June, so there was again a May month was quite a bad month. We had Nifty correcting around 6%, and you can see that there was a substantial rise in open interest, which clearly indicates that these were short positions. Bank Nifty, we didn't see any major formation of short positions, but already in month of April, we had seen a lot of formation of short position. HDFC Bank, if you guys remember, even this month, HDFC Bank had a lot of formation of short positions. Those positions got carried forward. Now, if you look at what happened from rollover figures June to July, there is hardly any increase in open interest in Nifty. Bank Nifty open interest rise is also very meager. Yes, we did see correction, but if you observe what is happening in market since last, or I would say from 16th of June, everybody was talking about that how Fed will increase the interest rates, and that is negative for markets because liquidity will move out. And Fed gave a surprise with hike in 70 bits, in interest rates. But that very day, market made the intermediate bottom, and next day you saw that there was a gap down opening, and then market started going up. Since then, we have seen some short covering. We changed our approach from sell on rise to wait play out on the bounce back. If you guys are following us on Twitter, which is Religare Markets or Religare Research, you'll come to know that every day how we are updating you about data, and we have been talking about that this bounce back right now should not be shorted into. And why we are saying that? Because we are not seeing any incremental short positions, neither in Nifty, neither in Bank Nifty. On contrary, there are still a lot of short positions which are standing in Nifty and Bank Nifty, and there is good possibility that that short covering, if and only if dollar index, if it doesn't go substantially above 105, we might see that there is further scope of short covering in this market, which can probably take Nifty to 16,200, which according to me is a strong resistance point, and not 15,900. You can see a 300, 400 point bounce in Nifty, and Bank Nifty too, you can see some bounce back. Now, before I get into where the rollovers are high and low, I also want to talk about some of the stocks over here where we have seen short rollovers. We don't have a slide for that, but I just want to talk about these names. If you look at HDFC Limited, Bajaj Finance, Bajaj Finserv, these are some of the heavyweights, NBFC names where we are seeing formation of short positions. Then you have stocks in auto space like Maruti, TVS Motor, then some of the other names like MCX, REC, where we are seeing long formation. But the important aspect is there are a lot of large cap names and heavyweight. HDFC Bank, L&T, Infosys. These three names have seen significant unwinding of position. We all know these stocks were correcting. We all know that these stocks had formation of short positions. So if there is a decline in open interest in these names, which clearly indicates that people are not very bearish on these names going forward. So at one hand, you have HDFC Limited and Bajaj Twins. Other hand, you have HDFC Bank, L&T, Infi, these kind of names showing signs of short covering. So all in all, there are mixed trend in market. So this market, at least for initial part of July series, doesn't seem to be sell on rise market. So, and see, when I say it's not a sell on rise market, doesn't mean that we are stating that, okay, the bull run has started again. Lower top, lower bottom formation has been visible since last few months, and every incline or every bounce back people are utilizing to sell, and that has made money. And it has become now an easier trade. 1, 2, 3 months you get certain trade. It is not necessary that fourth month you will again see same setup happening. And this is third consecutive expiry where Nifty has closed in red. Historically, we have seen that not many times this has happened that the fourth expiry is also red. So it is quite possible we might continue with this bounce back, or the best case scenario is we might stay here and there would be a lot of stock specific activity. And I mentioned about few large cap stocks which are showing trend. So this is our view pertaining to index. Now let me get into stocks. Now there are some of the sectors like infra and technology where we have seen higher rolls in terms of percentage, and there are names like power, pharma, and media where rollovers are less. And especially I want to talk about pharma space. Lupin, Dr. Reddy's, Divi's Lab. These three names have seen unwinding of positions, open interest to the tune of 20 to 25%. I think barring Dr. Reddy's, the other names have been in a downtrend. Cipla is also not exactly in a downtrend, but it is showing some signs of volatility and with a positive bias. So pharma is another name which might attract buyers attention, And if you're a positional short guy in pharma space, I think this expiry, that is July expiry, you should take a breather, and that's what data is indicating. On your screen, you can see that there are various sectors which have shown rollovers. Most of the rollovers figures in percentage terms will be high after what we have seen, when exchanges and regulator adopted physical settlement compared to cash-based settlement. So watch out for pharma space. There is rollover is less, but quite possible these are shorts which have not got rolled over, and you might see a uptick over here. Now, I want to be very specific with stocks. Again, I want to repeat over here. If you guys are following us on Twitter, which is Religare Research or Religare Markets, you would know that we are quite vocal about our liking for auto space since last 1 month or so. If not 1 month, at least 3 weeks, we have been stating that why we are liking auto stocks. I want to add a pinch of fundamentals over here. See why auto stocks were not doing well in a bull run. Because inflation was rising, commodity prices going up, you had chip issues, fuel prices were high, domestic consumption, at least from the transportation point of view, people were not adopting that approach because of COVID. It was work from home situation. So there were a lot of factors which were going against auto space. And now, despite market correcting, we are seeing that all those factors last 1.5 years, which were negative for auto space, those factors are turning opposite, which means there is ease in availability of chip. You are seeing people traveling to work, metal prices correcting, and above all these guys have gone up and gone ahead and increased the prices of their products. So which is giving a good reason to be biased in them. And so it's not just technical derivatives, but in media, I'm sure you must have been listening to a lot of guys coming and talking about auto space. If you have ridden this move with us, great. But what if you have missed out on it? Should you enter now, or should you just leave it, or you missed out on the bus? I think the meat is still left, and data is suggesting that. So very few stocks, or I would say hardly any sector, which has seen significant formation of long position and rollover from June to July series. Only one sector which is coming in our data models is auto space. Be it Maruti, be it TVS Motor, Ashok Leyland, which you guys are seeing on your screen. These stocks have added long positions, rollovers are high, and some of them are trading at 52-week high and making new highs, higher top, higher bottom formation on charts. So these are the names which we are liking, and we would continue to remain buyer. Even on fundamental front, we are coming out with a lot of stocks. We recently came out with Eicher Motors and M&M as a buy call. So auto space is something which we are liking, and we strongly believe that the rub-off effect of this auto space will be seen in coming days in auto ancillary space. So there too, we would suggest to have positive bias. There are stocks which have corrected substantially, both from valuation point of view, both from or if you look at charts, there we have seen some base formation exercise which is happening. So you can take exposure there too. Moving on, very important space, which is banking, and we have seen a good amount of traction over there. Now banking, as I mentioned, we are seeing a conflicting trend. HDFC Bank is showing signs of I won't say bottoming out, but it is indicating through its data points that it may not correct further. And we all know that HDFC Bank itself has lion's share in Bank Nifty and as well as in Nifty. So if that stock is not ready to go down, building a bearish scenario for Bank Nifty is difficult. But will Bank Nifty do well without Axis Bank, Kotak Bank? It's difficult to say, because some of the observation in these banking counters is not so positive. If you look at Axis Bank, we have seen that there's a correction. There is build up. Charts are showing that it is going and touching its base or support level again and again, despite market bouncing back. So this is not a sign of a strong stock. And same goes with Kotak. Sharp correction, built up is high, rollovers are high, and it has recently breached its support. It has bounced back from lower levels, but we are not giving too much weightage to this one-day bounce, and data is indicating that there could be further formation of short position in these names. So all in all, it's not a very weak market as per data. Price wise, people would say that 15,900 is strong resistance, and we might see again selling from there. But that looks, or it is not captured as of now in data. I also want to touch upon FIs. Now, I think it's a known fact to everyone that what FIs do in derivatives market is far more important from short-term perspective than what they are doing in cash market. Cash market, they have been selling since last 1.5 year. But then we have seen, market scaling new highs, doing well. You name the sector and that has done well, barring auto space. Now it's turn of auto. If you notice data properly for FIs, they started June series with very low long positions, or I would say in first week of June or second week of June, you must have seen that their long position was 12% in index future of the total index future position, and 88% was short. And when bounce back started, their long position went up to more than 50%. If I'm correct, 55% is what I saw. 55% long, 45% short. As on yesterday, we are yet to see today's data. As on yesterday, the short position of FIs was 85% and long was 15%. But don't give too much weightage to it. You check the direction in which it is moving, because we have seen that from 12%, 15%, it is showing bounce. And as market direction changed quickly, when FIs unwound their some short positions from fresh long position, that ratio changes. So there too, we are not worried much as of now. They have more of short positions. Yes, quantum of position because of rollovers have reduced, but we believe that there is a decent probability of bounce back, and that would change the ratio. And when I say we believe that there is decent probability, this we are talking on based on index futures data and what is the mix which came forward from the large cap stocks. So yes, HDFC Bank should not be a shorting candidate. SBI is showing some amount of strength, and if you don't agree with our view and you're still negative on market, and if you want to short some large cap stocks, then Axis Bank and Kotak Bank should be the preferred name to short rather than going long. So this is what we wanted to talk about this session. We are open for Q&A at this point of time. We will not take stock specific queries, but yes, if you have any concept which you want to talk about, technicals or derivatives, or want to know something about fundamentals, we can talk about that. And sector per se or index per se, we can have some interaction. You can type your questions if you have any in the chat box, and we would like to answer them. So Navneet Agarwal is asking that looking at the fall in Reliance today, which Nifty has absorbed, how do you see Nifty performing next week? We continue to maintain what we just spoke for 15-20 minutes about what is our view on markets. Whatever reports which we read and whatever news flow which we read or we went through, Navneet, it seems that the impact on Reliance may not be as huge as what market predicted earlier, and then we saw intraday bounce back. Our analysts are not very negative on Reliance. Reliance has come to a decent support level, but then I wouldn't take too much of bet on Reliance. And as you saw that as Reliance was underperforming, other sectors, other stocks came to pitch in. And despite when we have seen that Reliance correcting 6% and market closing flat, this itself is such a big indication that this market is not here to go down. And if 15,800, 15,900 is a resistance, then this should have been a reason for a big correction today. So that also answers today's market is answering every one of us that will market cross 15,900 or not. And I think those who understand market would read it as yes, it would cross. So I hope I've given some justification to your answer. Question, sorry. Priyanka Arora is asking where we can see rollover data. Priyanka, we have a rollover report which is released every Thursday. So you can go through those that rollover data, or every Friday we release that report. So you can go through that. As such, there is nothing called rollover data from exchange. You have to compare two Bhav copies and see, or last day Bhav copy. You can do some Excel exercise and you will get where exactly this rollovers are happening. But just seeing rollover percentage doesn't help. You have to compare open interest price of expiry day of this month compared to what has happened before, and then you will get some meaningful insight. I hope that answers your query. Ankit Jha is asking any view on IT sector. Should we buy from these levels? Ankit, it's not a yes or no answer because we are seeing Tech Mahindra, there is formation of short positions, and as I mentioned, Infi shorts have not got rolled over, which clearly indicates that it might be a stock specific approach which you would have to go for. And again, I'm again promoting our Twitter handle again and again. But then Religare Market, Religare Research, if you go to that Twitter handle, you'll see that we have posted a week back that how IT stocks, which were very expensive 3 months back, they were going at 35, 40 P. They have come down. I'm talking about trailing P right now. They have come down to 30, 25, and in some case like Tech Mahindra, it has come down to in case of SL Tech, it has come down to 19p. So they are not very expensive what they were before. Will they make reversal? My answer to that is no, because here now we are talking about probability of US market getting into recession. Needless to mention, most of the IT companies revenue come from US. So yes, they might have become attractive, but there might be some revenue challenges for next quarter or so, or maybe a couple of quarters. But will they correct the way they were correcting since last 3 months? My clear-cut and very confident answer to that is no. So you can probably accumulate, but don't put all your money at once. The preferred name for us would be SEL Tech, where we have official coverage, and that stock is one of the cheapest stock available at this point of time. And if you want to play safe, then obviously TCS is also the another name which you suggest. Kavita is asking, so do you have any target for this short-term bounce back in Nifty? I would refrain from answering that, Kavita, but yes, we are not negative. Have a positive bias. And if you want to play a bit safe, then you can probably have a bull call spread rather than buying naked call or going long in futures. But then positive bias is there. And as I mentioned in my commentary, that 16,200 is the next resistance according to me. So if there is something called target, and if you guys work on target, then 16,200 you should keep eye on. Puneet Chadda is asking about Dr. Reddy's. Puneet, you should go and see our Tech Edge report on Dr. Reddy's. It's a technical report, and we have given a buy call over there. I won't dwell too much into fundamentals, stock specific as of now, but then we have a buy call on Dr. Reddy's, and you should refer that report and take your or position yourself accordingly. Guys, requesting you not to ask stock specific questions because it would be difficult for us to answer all of them. Priyanka Arora is asking, is there any difference between NSE option open interest and Odin? There might be, I'm not very sure of, but I think all the feeds which we get are from NSE. But what happens, rather than telling you, Priyanka, that is there any difference between open interest on NSE and Odin, the open interest which you see during the day and the open interest which comes in Bhav copy, there's difference in that. So that should be good enough. I think you should stick to Bhav copy, Priyanka. Bhav copy is important, and you don't have to do intraday open interest analysis if you are a positional trader. Intraday, it's a blend of chart and data, but if you're a positional trader, I think you should just stick to Bhav copy. Navneet again is asking that how is FI long short data calculated? That data is given by exchange and regulator, Navneet, and you get a gross buy figure, gross sell figure. You do simple mathematics of adding, subtracting, and you get that data. So it's pretty simple. You don't have to do too much of that. You can refer our reports, and we do mention about FI's data there. More importantly, If you follow our Twitter, then you will see that we post every day our derivatives observation on our Twitter handle. And there you can get a lot of insights what FIs are doing. So we are cutting your work. So that should help you all. Okay, so next question is Varun Sharma is asking, do FIs can do speculation instead of hedging in index? Yeah, very much they can do it, and they do it quite oftenly. There's no rule as such that FIs can do only hedging. It is mutual funds who can do only hedging and no speculation in derivative segment. And the FIs exposure to any underlying or any market, that is you're, I think, getting confused between the currency market, where people can't take exposure more than what their import or export is there. So they can do, to cut long story short, they can speculate in derivatives market, and they very much do. Vijay is asking FIS options data, how to arrive at strike price specific data. No, you won't get that, Vijay. The data is more on index options. There's no bifurcation of, forget about strike prices, there's no bifurcation of Nifty and Bank Nifty also. So Naman is asking, if Nifty fell to 15,000, which sector and stock will be on your shopping list? See, it depends. Generally, what happens, Naman, that people tend to make a mistake that if a market falls, then sectors which have fallen, they would like to buy those sectors most. And most of the time, they get stuck over there. My simple way of doing, taking calls on sectors from medium term perspective is, I will see sectors which are not falling. And sectors which are not falling today are auto space. So in case if market goes to 15,000, which is not our view as of now, guys, let me make this very clear, which is not our view. It's a hypothetical question that if market goes to 15,000, and if it goes to 15,000 and if auto corrects, I buy auto. It's simple. And even if auto doesn't correct much, it's just correct 5%. And if banking corrects at 20%, I won't buy banking. I'll buy auto. That's and see, Naman, data changes. And if data changes, then you have to change your view also. So I think it's a hypothetical question. I would leave it over here. Daulat Khan is asking, sir, why the metal sector is in a bearish mode? As in our morning con calls also, we asked to avoid the metal stocks. Is there any specific reason? Because the trend is down. That's the simple answer. And if you see the base metal prices, they are correcting significantly. So if they are correcting, then I think metal prices have the stock prices have very strong positive correlation with metal prices. So if you look at aluminum prices, it has corrected from 3,500 to 2,500, and you're seeing the Hindalco stock is one of the weakest stock among the name. Tata Steel is also correcting. We are seeing formation of short positions. This brings me to one observation that Tata Steel has seen less rollover of short position this month. So it is quite possible that there might be a bounce. But the overall chart structure, the data structure for metals is negative. And we would suggest to avoid long position even in a bounce back. Sneesh Kapadia is asking that please give more insight in currency segment. I would say that currency segment, at least from the volume and business perspective, I think currency segment is going to grow substantially. People are seeing a lot of movement happening in currency. They are able to catch the trend as rupees depreciating. And as stock markets are correcting, people are moving towards currency segment. And if you're not, then I think you should take an exposure, because that is where we are seeing that the leverage can be more, direction can be more. There's a lot of liquidity in option segment in currency. So be there, learn first, and be involved in currency segment. That's what I would say if you're a trader. Investors can stay away. Kamal Verma is asking, what is my view on power space? I don't have very strong insight on power as of now. But if I have to talk about NTPC, that is where I have seen decent traction prices. We are also seeing some formation of fresh long position in NTPC. So sorry, Kamal, I don't have complete view on power, but NTPC is something which I'm liking from that space.
So before proceed further to address other queries, in the meanwhile, I would like to draw your attention attention towards a simple feedback form. I'm going to launch right away. Post this feedback, we're going to continue with our Q&A section. All are requested to participate in this feedback form. Your feedback is valuable for us. If you have any questions, request you to write in the Q&A section. Dear participants, if you have any questions, request you to write in the Q&A section so that we can address your query right away. It will be addressed by Siddarth itself. Last few more seconds to end the poll. Thank you. Thank you very much for your feedback. So shall we continue, Siddarth, with the next question?
Okay.
Vishwanath.
This session, Vishwanath Sangam, this session was there live on YouTube. So I am assuming Swaraj, she'll get the recording on YouTube.
Yes, very much.
Navneet, I'll avoid hypothetical question of if USD goes above 80. I myself don't know whether it will go above 80 or not. So I'll skip that. So please suggest where index bottom out in near term. Dipanshu, I don't know. I follow the trend. I don't predict bottoms or top in this market, and I don't think so I'm capable enough to do that. Varun Sharma, as we can see, markets has retraced around 15-20%, but on the other hand, gold has also not appreciated, instead has fallen. Is there any specific reason for that? Varun, actually, gold is not going anywhere. When markets were going up, gold was flat. When market is correcting, gold is flat. So I will not read too much into it. And I would suggest you also to follow the same. As of now, gold is not following, or market is not following any correlation with gold. If you really want to follow any correlation, I think dollar index is something which you should watch out for. If it goes below 103, then I think we might see some return of liquidity. And if you see it going above, substantially above 105, because now we have seen 105 as a strong resistance for dollar index. If it starts going, say, 100.5 or 106, I think then we are talking about further correction. So concentrate on dollar index, not on gold as of now.
We have got a question from
Meena is asking, sir, I don't get the proper knowledge for the market positioning. I want to know about where the market address further. Meena, it seems that you are from our branch. I think morning con call is something which you should attend regularly to know where markets are heading. Right now, our view is that you should not sell on rise this market. Maybe upside is limited, but any major correction, we are not seeing that happening as of now on charts or derivatives data. When I say as of now, I'm talking from 1 week perspective. Let's see how it goes. Kamal is again asking, sir, your view on technology and impact of dollar on June quarter results. So I already spoke about technology, that how some of those names have become cheap, or I would rephrase it. Some of them have become not so expensive what they were a month or two back because of the sharp correction. Impact of dollar is always positive, but then it's not just about dollar impacts margin, but what's happening in US will impact top line. If the growth, or if there are recessionary fears in US, then you might see some selling pressure continuing. If I have to buy a stock which is under my coverage, and if I have to say it from a medium to long term perspective, then HCL Tech is one of the cheapest name, and margin of safety is pretty high over here. So that is one name you think of adding into your portfolio, and TCS would be a safer bet to go with. Okay, so Vijay, if FIs are buyers in index options, suppose they bought 3,000 crores in index options, and if you see that built up is there only in 16,000 call option, so you connect the dot that if most of the build up is in 16,000 call option and FIs have bought 3,000 crores of index option, then you connect it that maybe they have bought 16,000 strike price. But there is no specific data as such which tells you that they have bought 16,000. You have to analyze things and say. So I must have said from that perspective, it is not that you get strike specific data of FIs. I hope that answers your query now. In a long-term perspective, what is the scope? You have a list of high conviction ideas of Religare. That is where you would get all the stocks where you should be invested in. And I would again say that we keep covering about long-term investments in our morning call also. You have to be active there, and you'll get to see that what we are recommending from long-term perspective also. But then you can go to our website, you can go on our app, and you'll see all those stocks which you should do long-term investment in. Anurag Pandey is saying, with US 10-year cooling off from its highs, do we expect more significant hikes like previous times from central bankers, whether India or US? Anurag, thanks for asking me this question, because I am in that camp which believes that there may not be a significant rise in interest rates going ahead, because this is not a demand-led inflation. This is supply-led, or because of there are supply bottlenecks. That's the reason you have this high inflation. It is because of war. Just rising interest rates will not solve this problem. Tomorrow, if there is if war stops, this inflation will crash like anything, and then all central bankers may not look that intelligent that they would start reducing interest rates, because hike in interest rates has led to less credit offtake and recessionary pressure. So I have the strong belief that if we don't see crude oil price going up substantially, even if it remains at current levels, and commodity prices remaining at current levels, we may not see a significant rate hike going forward. And that is what probably we are seeing some cooling off in US 10-year. Too early to comment this, that there may not be rate hike, or there will be very little rate hike, but I'm in that camp, Anurag. We'll take one or two maximum few questions, and then we would like to end it, so that.
Sure. So dear participants, if you have any questions, request you to write in the Q&A section. Any more questions? So Siddarth, I believe there is no more questions. So
Okay.
we can conclude.
Yes, we can conclude here.
Right. So thank you, Siddarth, for your wonderful insight about the market and the overview forthcoming month. And with this note, I would like to thank you all the participants for joining with us. With this note, thank you. Have a great day ahead. Take care. Bye-bye.
Thank you. Thank you.